Hi, so most trading strategies look great on paper until the market goes crazy. And the real test isn't a calm bull run, but a flash crash. And that's where most funds lose millions. So let's cover the exact drill that exposes whether your strategy can handle a flash crash, and if not, how to improve it. And most funds skip this until a real crash happens and loses them millions. So step number one, first you need to choose your scenario basically. So by how much, for example, within 5 ticks will the market drop? Or for example, you have define a drop of more than 3% within 10 seconds or any other time period. So that's your first step. You define your exact scenario. Okay, and then your step number two is to randomly inject that scenario that you defined into your historical data, into your backtest data. For example, over a couple of days, inject this 50 times and don't do it such that it's easy for a strategy. Make it hard, Define actual stress days and stress periods to test it. Okay, and your step number three is to rerun your strategy with realistic expectations and assumptions. So this includes, for example, slippage, partial fills, delayed order acknowledgements, stuff like that. Because instead of having perfect mid-price fills and backtesting, what you will actually have during, for example, a flash crash is that your market order executes 20 ticks away from the price you intended. So step number four is maybe the obvious one, which is just to measure the damage of the new test that you just did. So how long, for example, did it take for the strategy to get back to its normal profit and loss trajectory? And what damage did the noise or the bad data you introduced into the historical data, what damage did that do? Okay, and your fifth and final step is, of course, to fix what broke. So, for example, have a buffer zone around your stop orders, tighten your position sizing, things like that. And then, of course, run it again. Run the backtest again with your historical data with the flash crash data injected, just to make sure that your fixes actually worked. Okay, and this is the real lesson. So, risk controls that work in calm markets break when stress hits, and every institutional strategy needs to prove that it can handle chaos, not just survive it. And if you are an institutional investor looking for those strategies, head to autotradelab.com. And otherwise, thank you so much for watching. Hit the like button, smash the subscribe button and the bell, and comment down below what you think are other good tips. Thank you for watching.